Hey guys, Adam Carroll of Palma Capital Investments. Today I'm going to teach you how to analyze a market and look at the expected deliveries, the expected net deliveries. I'm going to teach you how to look at how the expected net deliveries affects the vacancy and how the expected net deliveries is going to affect the rent growth. And I'm also going to teach you how to look in the market and determine if there's a lot of oversupply or if there's going to be oversupply in the future. Um, because you probably don't want to invest in a market that's going to have oversupply over the next few years. It's going to be extremely hard to increase the property's revenue and increase rents. You're going to have to offer concessions. There's going to be a higher vacancy rate at the apartments that you own. But another thing that I'm going to just briefly touch on is what you can do if you are investing in a market and that market over the next few years is going to have extremely tight vacancy rate and a limited housing supply. What can you do to help relieve some of that pressure that it puts on the tenants and relieve some of that stress that it puts on the tenants by creating new units or creating a little bit more housing without doing full development projects? Well, guys, I hope you enjoy the videos and learn a lot. Okay, guys, let's go ahead and jump into this report. Right here, we have a CoStar report pulled up. If you don't have access to CoStar, there's probably a broker in the local market that you're looking to invest in that has access to CoStar, and they're usually really happy to send you reports if they think that you're a potential client. So this is a chart for Reno, Nevada. It shows the absorption, the net deliveries, and the vacancy rate. So let's go ahead and take a look at the absorption is going to be the orange color. The net deliveries is the blue color. The vacancy is the green color. And we're going to be looking at those three things right now. So you can see in 2023, the vacancy rate spiked. It spiked a ton. We reached almost a 10% vacancy rate, which is really uncommon for Reno, Nevada. And that's just because so many things were being built and so many new units were being delivered to the market. And there wasn't enough people moving here to fill all of those doors. So you see when the orange line is not meeting up with the blue line, that means our market's starting to become saturated with oversupply, and that's going to really drive that vacancy rate up. We're kind of at a turning point right now. It's 2025, and to continue forward in this market, we're not building a lot, um, which is good. It's a good thing, and it's a bad thing. The fact that we're not building a lot means that vacancy rate is going to drop a lot, and it's going to give the opportunity to apartment investors to continue to raise rents, and it's going to be a really competitive rental market. So they're not going to have to offer as much concessions, and they're going to have the opportunity to continue to raise rents. So that's a good thing for investors that want to buy an apartment complex and just get a really great return. But sometimes, if the market's already little bit overpriced, like Reno, Nevada is kind of overpriced already. We've had a lot of people move from California and really drive up the rents. And we're kind of in a position where some of the tenants need some relief and they can't really afford a ton more rent increases. They can't really afford another 5.5% year over year rent growth for the next few years. So there's going to be supply issues in the next few years. And like I said, it's going to drive vacancy down. It's going to drive rent growth up. But there is some things that we can do as real estate investors to make a good amount of money, but to also help out the tenants. And some of those opportunities are looking at, a property that is vacant and it's extremely torn up and going in there and buying that property and purchasing it, whether it's a single family home or an apartment complex, and renovating that property and getting it to the place where tenants can occupy it, or you can sell it to someone who's going to occupy it. And that will put some relief on the housing market, creating new supply without actually doing ground up development. There's a couple other things that we've seen a lot of people do before, and that's to go in and buy kind of like a rundown hotel room that has, bad tenants there that are really doing bad things, a lot of shitty business going there, and drug use. And you got to try to find it one of those motel rooms that's not surrounded by other bad properties. Otherwise, you can buy that bad property and you can make it nice, but there's still going to be a lot of bad tenants in the area. But if you find a motel that is going to run down in a halfway decent area and you want to go ahead and purchase that motel and convert it into studios or maybe even one bedroom apartments and make it a nicer place and put a little bit stricter requirements on tenants to get in there, that can often create a lot more housing supply and help relieve some of that pressure in the housing market when it is a really tight housing market. We're going to go ahead and look at how the net deliveries and the absorption affect the projected rent growth. And guys, you can see here in 2023, this is the rent growth, the market rent growth year over year, or the orange bars. What happened in 2023 to net deliveries? Net deliveries were at a peak. The vacancy was at 10%, and there was a ton of units being delivered to the market, which actually put downward pressure on the rent growth. People couldn't raise rents. The properties were having to offer concessions. And again, moving into 2024, 2025, there was still some properties being brought to the market, but not as much, which let us start to grow a little bit in rents. But again, over that next few years, there's not a ton of properties that are going to be delivered to the market, which is going to put a lot of pressure on the rent growth in the rental market. And we should start to see some pretty decent and steady rent growth. And again, we don't want it to get too bad because we don't want it to create hardship in people's lives. And we want to do what we can to relieve some of the rental pressure on the market by creating new housing or renovating down units that couldn't otherwise be occupied, or purchasing homes that are too bad to occupy right now and renovating those ones as well. So I hope you guys learned a lot looking at this chart, and I hope you guys learned a lot about the new opportunities that it is going to create for developers as well as investors if you are looking at a market that has limited supply. Thank you guys so much for joining me today. I really hope you enjoyed the video. If you guys have any questions, comments, or anything like that, please drop them in the chat and I'll make sure to respond to them. If you'd like to see any videos on future topics, please drop those in the chat and I'd love to make a video on the topic that you would like to hear about. Thank you guys so much for tuning in today. Don't forget to hit that like and subscribe button.